Welcome back. Thanks for staying tuned to the Smith Show on NDTV Profit. I'm now joined by the management of Metropolis Healthcare. We have Surendran Chemmenkotil, who is the CEO at Metropolis Health, to talk to us about the Q4 numbers and the way forward. Welcome, sir. Just to get context, talk to us about the value versus volume growth that's come through in Q4 and what are the more sustainable trends that you're expecting, or are these kind of trends sustainable?
Good morning, Harsh, and good morning to all your viewers. Yes, we really had an exceptional quarter in quarter four last year. We have grew the revenues by 11% at a reported level and 15% on the core revenue. And also we had a 25.5% EBITDA in quarter four, which is the best in the last 4 quarters. And EBITDA grew by 15% in quarter four. So overall, if you look at it, there is a exceptional performance on all the parameters across. What has led to the growth? In fact, the 15% growth has been fueled by roughly 7.5% from the volumes and the remaining 7% from the realization. And the realization has come on two what you call attributes. One, of course, was the mix change, which is improved by about 4%, and the remaining 3.5% has come from the price increase that we have done in quarter four. Right, so 15% growth in quarter four. And what is sustainable growth? I mean, full year basis, if you look at it, 13.3 is our core revenue growth, and going forward, our reported revenue and core revenue will be same. So hence, anything above 3.3% definitely is a doable number. So we are looking at stretching it beyond 13.3% in the coming year, right? And EBITDA at 25.5% in quarter four. Definitely we are holding this going forward in the year 25 and maybe bettering it by 0.5% or 1%. So that looks like the guidance for the year ahead.
Okay, on pricing, right? That's quite comprehensive. First off, I want to compliment you on that. But on the pricing front, I want to try and understand how FY25 evolves, because you have guided that there is a need with regard to price hikes, if I'm not wrong, and therefore will that be expected in FY25, and if so, when in FY25?
See, normally in this industry, what we have seen is that price increase happens once in 2 years, largely to beat the inflation, right? And other price increases, that is the input cost that which goes up for us. So we have done the price increase in January this year. So for the full year, unlikely that this 25, unlikely that we take one more price increase. But let me also tell you, the price increase has 2 components. One is the B2C price increase and the B2B price increase. B2C is relatively, easier to do because it's done through at our own centers and touch points, direct customer, right? But B2B price increase is very difficult to do relatively because you need to go back to each of your clients, each of your hospitals, labs, and talk about increase in price. And that's also very highly competitive space. So it's not definitely possible to do a price increase in B2B that often. So I'm even not looking at a price increase in B2B in the coming year. B2C, like if the industry permits, if there are opportunities coming up, we may look at it. But otherwise, at this point of time, it's very difficult to comment that we will do another price increase in full year 25.
Okay, understood. Very unlikely, it seems. With regard to expansion plans, how many new centers are you looking to open, and what's the geography target like?
See, if you have looked at Metropolis trends in the past few years, last year, which is 23-24, we have put up 24 new labs. And the previous 2 years put together, we put up similar numbers, some 25-26 labs. So we definitely, accelerated the lab expansion in the year 23-24, and I clearly see that momentum getting continued to this year as well. So another 25 odd labs should come up during this year. And we are looking at the geography expansion in 2 different lenses. One is on our strong markets like the West and the South, which go far deeper, right? Go at every district level or beyond that. And for all the opportunity market like North and East for us, we go wider. Pick up strategic locations and put up a lab. And of course, every lab expansion has to be followed by a collection center expansion, or in fact, some of the expansion of the collection centers happen a little ahead of the lab expansion. So we added last year about 550 new collection centers, and a similar number or better number should be expected for this year as well.
Okay, understood. And what does this in terms of top line growth, how does this aid your top line numbers in the overall context of things?
See, if I have to split the 13.3% growth of the previous year into the existing infrastructure that I had plus the new infrastructure, it would be roughly about 9% from the existing infrastructure, and 4% we get from the new infrastructure that we put up, both the labs and the collection centers put together. And a similar number should kick in for this year as well. So, with our expansion plans on infrastructure being the same as previous year or maybe a little better. So I'm really expecting a 4 to 5% growth only coming from the infra expansion, during this year.
And you'll be happy with an early teens kind of growth even next year?
Well, I think we are aiming for a mid-teens growth for this year, because we have set a very good, situation in Q4, right? I think we are exiting last year with a high, right? And I think we will try to take this momentum forward during this year, and we'll be really aiming for a mid-teen growth during this year, 25.
Understood. Talk to us about the north and east markets. What's the plan? How are you looking to better penetrate those markets? What's the kind of opportunity for you over there versus what you're already doing? Is it replicable?
Yeah, so 2 or 3 things, like in north and east, we actually picked up now 3 states, for example, as our priority areas, because you can't do everything together, right? So we picked up Uttar Pradesh, Uttarakhand as one part of the UP. And then we picked up Madhya Pradesh, right? That's other market that we wanted to grow. And on the east, we have picked up, Assam and Northeast as a market to grow. So this year, predominantly you will find these 3 states getting a lot of attention from our side. And in the strategic locations in these states, we will be putting up, new labs. And ahead of putting up the labs, we will be definitely reaching out to these places, creating our B2B network, channel network to start with, bring up the volume to a certain level, get the brand familiarized in the market, get the reports familiarized with the market, and also get some good contact with doctors, because at the end of the day, our strength is our specialty business. We are very good at, we were very strong and the unique brand when it comes to the science part of it, right? So we will try to use the presence in these places, definitely to serve the routine and semi-special tests, but also use the market opportunity to pick up the specialized sample and then maybe bring it to the nearest reference lab and do the specialty test. So we have plans for the north and east for this year, and maybe we'll extend it in the coming year as well. So they're opportunity market for us, and we will put our best to get the numbers coming from these markets.
Okay, you've guided for margin expansion. So talk to us about what levers you have for that, because you seem to be satisfied with the top line growth overall. Yeah. So what levers do we have now?
So, well, see, we have had 25.5% EBITDA in the last quarter, right? Which is definitely a lot of corrective actions have already been put in place in Q4 itself, by all our cost initiatives, all our optimization initiatives, getting the best productivity from the existing labs and the existing centers, and identifying some of the wastages that we have in the system and correcting it. So we already had a whole lot of job as far as Q4 is concerned, because Q4 at 25.5 is the best quarter last year. And, I would like to definitely see that momentum taken forward into this year as well. So 25.5% and upwards will be the EBITDA guidance for this year.
Yeah, so Mr. Chemmenkotil, I want to try and understand what are the levers therefore available for you to expand that, because as you correctly said, there's a lot already been done with regard to cost optimization. So what can further be improved for you to get there?
So, like I mentioned, we are looking at every OPEX item. See, at the end of the day, this 2 big cost element in this industry. One is the people cost, which is HR cost, and which is the other one is the material cost. These are the 2 biggest costs in this. Almost constitute to 50% of your total cost, right? So we are looking at now how do we improve the productivity on the materials side, and how do we get a better negotiations from the vendors, when it comes to the material that we buy, and how do we also optimize the utilization of the material. That's one big project that we're actually running. And secondly, we are also looking at the best productivity from the people that we have in the organization. We have simplified the structure, prepared guidance for what kind of a resourcing that we should do at various elements like labs and our offices, etc. So we clearly see an opportunity to optimize on the the HR cost, and it doesn't really go up this year like we had in the past, right? And third thing is we also set up, identified a few centers, few labs where the margins are maybe an opportunity to improve, not at best with the labs that we have otherwise. So in these particular labs, we will find out what is the difference between the rest of the labs, and we will bring in more productivity from these places. So these are the few things top of the mind I can tell you in terms of improving the opportunity on EBITDA.
Understood. And very quickly, what would that improvement number be like? 50 bips, 100 bips? Is that something that one can expect?
That's what I said. We exited with 25.5. So
Right.
you can expect a 0.5 to 1% improvement in EBITDA during this year.
For the full year, FY 25, full year. So maybe
Exactly.
maybe 26 odd to 26.5% is where the margin number.
26% definitely should be a doable number for us this year on EBITDA.
Understood. Got it. Thank you so much, Mr. Surendran. It's been a pleasure speaking with you and getting us all of that perspective on Metropolis Health.
Thank you very much. Pleasure, Harsh.
Right. With that, completely out of time on this edition of the show. From myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More on the other side.